Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA. We'll look at various time frames and we'll also take a look at market Cipher. So we are seeing a pullback on Bitcoin. We did peak out at around 31K. Currently we're at 27.4K. We're just going to go through the different time frames and look at some possible levels where we may pull back to. This is the 2-week time frame. And there's not much to go on the 2-week. We do close this 2-week candle at the end of the week. But looking at order blocks, there isn't too many here on the chart. The next one lower down is down at 23.5K. And going down to the weekly time frame now, we did have this order block here from this green candle in a downtrend. These order blocks are areas of supply and demand. It's a break in a trend. You can see we had multiple red candles and a single green candle breaking that up. Time was spent here and therefore volume. And so these levels can become of interest later on, acting as support or resistance levels. So we were watching that level with our current weekly candle. We did close above it, which was a good sign, but generally we come back and retest that order block and we look for support. And if it does hold and we end up closing back above it, generally that means further upside. But currently we are well below this order block. There are a few days left in the week, but it does look like we're possibly going to close below this order block. We do have another one here, which is at around 28K, and we are also below that order block by about $500. So this one will be the one to watch to see how we close the weekly candle. If we are able to close back at least inside or above that order block, there is the possibility that it will hold as support. The next order block further down here is actually from this red candle in an uptrend, and this one is down at 23.3K. So there isn't many order blocks in between here on the weekly, and we do see this does line up with the 0.5 fib on the overall retracement from the bear market low to our 31K peak. So there is some confluence on the weekly with that level. We do also just have a trend line drawn in here connecting the lows. And we see that does line up with that order block around the 22nd of May. But these other levels are important too. The golden pocket is further down, getting towards 21K. And there is also a couple of order blocks down at those levels. So there is also confluence with these order blocks and the golden pocket. But quite often when we are in a bullish market, we often only pull back to the 382 fib. And that's currently sitting at around 25.1K. And if we were to look at the other fib levels, obviously this one is from the bear market low. We did have a decent pullback here, so we can do the fib from this low to the high also. And if we do add that one in, we do see a little bit of confluence here with the 382 fib on the overall retracement and the 0.5 fib taking it from this low. And we also see the 0.5 fib is also pretty similar to the golden pocket. But I'm looking at this as a possible target here around the 0.382 fib and the 0.5 fib. We have been very bullish here, and as mentioned in strong bull trends, we quite often only pull back to the 382 fib. There is the 382 fib here from this low, and that's currently sitting at 26.6K. So if we did come down here, we may get a bounce off of this level, but then we may continue down, coming down to that lower target. We'll have to see how we react off this 382 fib we see on these previous candles. We did get bought up on these pullbacks, bouncing off a similar level. We can also pull up the VPVR now, just to look at this range over the past year approximately. We do see there is a gap here. There wasn't much volume in this area. Obviously, we went straight up here and straight down here, so we didn't spend time in that zone. And we see where we are currently. We are below this main cluster here on the VPVR, and the next cluster further down starts to kick in around 24.9K, which is in line with that 382 fib and the 0.5 fib. And then we see stronger support further down where we have the 0.5 fib and the golden pocket coming in at around 23,400. That's just over this immediate price action. If we were to go back and look at all of the price action here, we do see a similar thing with a gap in this area because we did go straight up also in the initial run here in 2020. And we do see a similar thing. It does start to kick in around this 382 and 0.5 fib. And we get stronger support here at the 0.5 fib from the overall low. and that is quite a big spike there. That's at 23.7k. The other thing we can add in here is the 200-week moving average. That's currently sitting at around 25.8k. So we would expect maybe a bounce at least off the 200-week moving average. And perhaps we wick down to this zone I was talking about, around 25k, but end up closing the weekly above the 200-week moving average. So why am I mainly looking at this 382 fib and the 0.5 fib here at 25k? Well, one of the main reasons is this was the top of our range here. If we do draw a line across here, we do see this was the top of this bounce and also the top of this bounce where we got that pullback. So this was strong resistance here. Generally, resistance turns into support, and we see that is in line with the 382 fib and the 0.5 fib. So I do expect this level to hold here. And if we actually look back at previous bull markets now, going 2 cycles back and looking at this bottoming zone, there were similarities with the bottom of this bear market in 2015 and our current cycle's bottom. But what we notice here is we did have this run up out of the bottom of the bear market, and then we did have this pullback here. This doesn't look like much, but even taking it from the body of the candle here down to this low, this was actually a 20% pullback. But what we do notice is if we do take this high here and drag that across, we see it does also capture these two highs and not far off of this high here. We can actually mark off this high as well. It was in a similar range. But what we see on this first pullback coming out of the bear market is basically on this pullback, we did hold this level of support from these previous highs. So this was previously resistance, this zone here, and then we did on this pullback flip it into support. So I think we're going to do a similar thing and come back to that level. And again, just taking it from the body of this candle down to the low, we see it was about a 20% pullback. But going back to our current cycle again now, again, we're looking at the tops of these two bounces and flipping this resistance into support like we did in that previous cycle. And that would be a pullback of about 19%, similar to what we had in that other cycle. The other thing we can look at is the weekly EMA ribbon. This is a collection of moving averages. And in previous videos, we looked at how coming out of the bottom of the bear market, once we sort of get above this ribbon, we generally need to flip this. So the yellow smaller moving average gets above the red. Normally, once that happens on pullbacks, we bounce off the top of the ribbon, but it doesn't mean it can't still hold as support. And again, this yellow line is one of the key ones. I believe this is the 20-week moving average. That's currently sitting at 24,500. And we see over the coming weeks, it'll probably come up to this level we're looking at around 25k. So I think we possibly come to this level and into the weekly EMA ribbon, and we get support off that ribbon, and then we do get a bounce. And if we look back at that previous cycle we were watching here, 2014, 2015, and look at the weekly EMA ribbon, we can see we didn't quite pull back to the ribbon on this pullback, but on the next pullback, we did come to the top of the ribbon. And again, that yellow line is the most important one, the 20-week exponential moving average. And we did bounce off that on these pullbacks and several other ones. But we saw basically in the whole bull market that that ribbon did hold. We didn't close below it until we started the bear market. So generally, once we do get above it after the bear market, we don't close below it. So that's something that I'm looking for to happen again. And I think we can come into the ribbon and to that yellow line, but I don't think we close a weekly candle below the ribbon. So back to our current cycle, again, the bottom of that ribbon is at 24.1k, and I don't think we end up going below this ribbon. I think once we dip into it, it will get bought up. And again, I don't think we'll end up going below this ribbon. Another thing we can look at on the weekly time frame is the RSI. We do have a couple of trend lines drawn here, one connecting the overall lows and one just connecting these more recent lows. We can see we have broken this trend line. We do need to wait for the weekly to close to confirm that. But generally, when we break a trend line like this, it does mean further downside. And I don't know if we come all the way down to this line, but if we do, this will be an area to watch. And if we go back to that previous cycle we were looking at, this is 2014-15 bear market. We had a similar thing with a trend line connecting the lows here. And we did eventually come back to that trend line, but we do see on this pullback here, which I think this is where we're at in the cycle, we didn't pull back all the way to that trend line. Then we did get that bounce, and then eventually we did come back to that trend line after consolidating for a while in this range. So I think we do a similar thing. That's just a trend line to keep an eye on. And I think we don't come all the way back to that trend line, but we do come back to the tops of this previous resistance. So let's go down to the daily time frame now. And we do have more order blocks to look at on the daily. And we can see we've got the same setup. We've drawn in those same fibs from this low and this low to the high. And there's that level, that 0.382 and the 0.5 fib. And also this blue dotted line connects the highs, which were previous resistance. And I have kept in the golden pocket from this low and the 0.5 fib from this low. We do seem to have several daily order blocks down there, so we can't rule out that we do come down to this area. And that goes as low as 23.2k. But looking at these order blocks a bit more closely now, there are several order blocks here, but the more wider the color, the more those order blocks overlapped and they can become key levels. We do see how that did act as resistance. There were more order blocks overlapping here, and this is where we ended up topping out. We did a wick to the top of the order block. We did come down here. We had another order block within an order block here. We did get an initial bounce of that, but we have gone through that order block. These are just single order blocks now, and we don't see the next order block until we get down to 24.7k, and the next overlapping order block range is down at 23.8k to 23.5k. So there are those two key levels here, and we could possibly come down to this area, but I think anything under 25k is going to be bought up quite quickly, so we might just see some wicks in this area, but it is something to keep an eye on. The 200-day moving average in red here, we do see it starting to climb up. It is pretty much following this trend line connecting the lows. Eventually it will be in line with this area, but that wouldn't be until the end of May. The 50-day moving average is quite close to our price. That's currently sitting at 26.8k. So we may even get a bounce off this 50-day moving average. And I guess the thing we need to watch for is if we do close a daily below this order block, which would be below 27,000 approximately. This one is a bit more significant than this one because it's from a more immediate price action. So this is something we need to look for. If we close below 27k on the daily, it may initiate further downside. The EMA ribbon on the daily can also be useful. We can see here acted as support. Once we did close below it, we had a bigger drop in a short amount of time. So we could see something similar. Currently, the bottom of the daily EMA ribbon is at 27k, in line with the bottom of this order block. So a similar thing, if we do close a daily below 27k, we may see quite a quick drop, possibly down to 25k area. We'll have to see how it plays out day by day here. I do think we have a bounce along the way here. I don't think we come straight down. Quite similar to this pullback, we did spend some time consolidating before continuation. Another thing I'm watching is a trend line on the RSI. I think this one will be more important than that weekly trend line we looked at. We do see that this trend line does connect three of the lows on the RSI, and I think we possibly do come back to this trend line and we get a bounce from this trend line, and that could possibly line up with this 0.5 fib level we're looking at 25k. But we'll have to play this out day by day, watching this key trend line and watching these order blocks. This is something I think will be significant. And looking at the CME Bitcoin futures chart on the daily now, we've got a same setup. We've got the fib levels drawn in. Again, the top here of these levels does line up with those fib levels. We did end up closing at this small gap here we had, and there is also this gap further down at 20k. We do have to remember about that gap. I personally don't think we come all the way down here, but we do have to be aware of it. Most of the gaps do get filled. And a similar setup, I do have a trend line drawn on the RSI connecting the lows. So I'll be watching this trend line as well as the daily RSI trend line on the spot price chart. Now, if we pull up the VPVR, the volume profile here, you can see looking at this entire range, that we also have this gap here, below 27.7k, and there wasn't much volume there until we get to 25.2k. And then we see the biggest spike here at 23.3k. So this seems like a logical level where support would start to come in. But as mentioned, I think we could wick down to some of these lower levels, possibly to where this spike is at around 23.3k. But we have to let it play out. And let's go over to market cipher now. So we're going to start here on the daily time frame. And the first thing I notice here is looking at coming out of the bottom of the bear market with these two pullbacks here. What we noticed is looking for the green dot on the daily time frame. We did get that in this area. That did mark the bottom of this pullback. We continued higher and then we did drop further down. And again, looking for that green dot on the daily. It did also get the bottom pretty well here on this pullback. So it's something else to watch for here on this pullback. We do see that this wave has been coming down quite quickly here. So we need to look on the other side for that daily green dot. And possibly that could end up being the bottom of the pullback. And that could possibly be at the area we're looking at here, that 0.382 fib, which is also in line with the 0.5 fib, taking it from this low. And also the top of this range where we got resistance and looking to flip it into support. So we have to watch this blue wave on the daily and look for those green dots. If it does happen in a similar area, then we will at least get a bounce, and perhaps that may be the bottom of that pullback. And again, that would be a pretty decent pullback, a 20% pullback. The difference here is the money flow has dipped into the red, and on these occasions, the money flow was in the green. So we do have to be aware of that. These green dots are more reliable when we are in the green money flow. The 2-day time frame did get a red dot that was confirmed on the 19th of April. However, we are still in the green money flow on the 2-day. The 3-day also currently has a red dot. Won't be confirmed till Saturday. We are also in the green money flow here. But we can see it is quite choppy with these red and green dots. So these time frames haven't been as reliable. And that's why, as mentioned in previous videos, we were looking for that red dot on the 9-day time frame. That was the most consistent comparing to previous cycles. The 4-day also has a red dot that won't be confirmed until Sunday. And the 5-day also has a red dot that has already been confirmed. The 6-day also has a red dot that won't be confirmed until Tuesday. And the weekly doesn't have a red dot present yet. And the 9-day now, this is the one we're looking for that red dot. If we go back to previous bear markets here, we do see the 2019 bull run start here. We had this massive 300% rally, and once we got that red dot here on the 9-day, it did pretty much get the top, and we had a major pullback, which was a 50% pullback here. And going back further to the cycle before, this is 2014-15 cycle. And what we see here is we didn't get that 9-day red dot until we were a bit higher. We were looking at this pullback here, comparing it to our current pullback on those other charts. And we saw we didn't actually get that red dot on this pullback. So it was a 20% pullback from the body of this candle. And we pulled back to the top of that range we spoke about, where it was previous resistance turned into support. Then we did carry on higher, excluding this wick here. Once we got that red dot here, we had more of a sustained pullback. And we see from the top, this was around a 25% pullback over a whole month here. So if we do end up getting a red dot here and it does get confirmed, then perhaps we do need to look at those targets lower down around 23k and possibly even 20k to fill that gap. And that would be more of a 27 to 30% pullback. But as mentioned, I think we do pull back to this level around 25k. And perhaps by the time we do that, we don't actually get that red dot confirmed. As mentioned, this is the 9-day chart. So these are 9-day candles, and a lot can happen in 9 days. And to get a red dot and it confirmed is 18 days. So we can come back to this level within those 18 days and get a bounce, and we don't get that confirmation of the red dot. So I do think we do a similar thing. I think we come back to this level. It may be quite quick, and then we do end up going higher, and then we have that more prolonged correction that is more of a possibly 30% correction, and we get some consolidation in a range. But basically, we were in this range for quite a long time here, consolidating at the bottom between 15K and 25K approximately. And we did exit that range. And now we're in this new range here, which is basically just capturing the bottom of this pullback and also this high. So we did spend time consolidating in this range. So this is the new range that we are in. We didn't quite come to the top, which would be 32.3K. And again, I think we come to the bottom of this new range and we get support of the previous range here. But if we do the same thing now with that previous cycle, 2014-15 here, we look at those similar ranges. Basically, this was the bottoming range. We spent a long time in this range here, similar to our current cycle. Once we broke out of that range, we did enter a new range here, and we can see doing the same thing, taking it from this low to this high. We spent time consolidating here. So we did have that new range there that we did enter. It did overlap a bit here, but that's fine. But when we look at the pullback that we're comparing here, you can see we went slightly above the range, didn't close above it. But that pullback, we did end up getting support off of this lower range here. There was that bit of a crossover where we wicked into, but basically that held as support and we didn't re-enter that lower range again. And a similar thing with this range, once we closed back above it, we came a lot higher. We had a big pullback. And where did we get support? Off the top of that range, pretty much exactly. So we're just flipping levels here, spending time consolidating in previous ranges, and then on pullbacks, using that previous range as support. But I think that's about all. Hope you enjoyed that analysis. Again, anything can happen here. I am looking at that 25K level. There is that possibility that we do come to the 23K, where there was also those confluence of fibs, which was also the 0.5 and the golden pocket fib from both of these lows. Again, that's around 23K to 24K. And then, of course, that gap at 20K, but I don't think we're coming that low. From what I can see currently, I'm looking at 25K. We'll have to see how that plays out. Again, I hope you enjoyed that analysis. I'll try to keep regular videos out as we follow this along. But I think that's all for today. Thanks for watching. I'm Bitcoin Mamo. I'll see you next time. Bye.